Hello everyone, it's Dale here with new weekly trading ideas video. What you see before you, this is a NinjaTrader 8 platform with my custom-made volume profile and view up indicators. This is the euro-dollar chart, and let's focus on the levels here first on the euro, alright? Let's start with this resistance level, which is at 1.037, and this one is based actually on a bigger scope of things, because it is based on a weekly volume profile. If you look at this volume profile right here, this is the weekly volume profile from the previous week, and it shows how the volumes were distributed throughout the whole previous week. And from this weekly point of control, this is weekly point of control, that means heaviest volumes throughout the whole week were traded here. So from this weekly point of control, the price went into this strong selling activity, right? So this is telling me that sellers were active here, building up their short positions around the weekly point of control, and then they push the price downwards. Now when there's a pullback to this level, I expect that there'll be a reaction. Now, this level is not just about the weekly point of control, but if you look at how the volumes were distributed just on Friday, you can see this heavy volume zone from which this strong selling activity starts, right? So this is telling me that sellers were active here, and those sellers should defend this place. This is the beginning of that heavy volume zone. So what we need to do now is just wait for the pullback and take it from here. Maybe you've noticed there's also fair value gap here. That's this red highlighted thing here. It's from Smart Money Concepts, and it is a setup that I like to combine with those heavy volume zones. Alright, so that's the short on the euro. I also had a long level there, which was based on this strong rejection of lower prices and on this volume cluster formed within the rejection. This was the long. Unfortunately, the price turned a little bit before the level, so nice reaction, but if you look closer here, the price turned a little bit before the level, so the level is no longer valid. I just wanted to show you how one of the setups that I traded, that rejection setup, how nicely the price reacts to it. Right, so that was the rejection setup here on the euro. Another setup, and maybe you remember, because last week I was talking about this setup too. When there's opening gap, and behind that opening gap there's a heavy volume zone, the price likes to react to it, right? And it did a nice little reaction in here already. So this level is spent, but again, you can see that setup which I was talking about last week working very nicely again. This setup also formed on the US dollar Canadian dollar. Let me show you here. In this case, the gap hasn't been closed yet, because this is the gap. And by the way, this is the 30-minute chart of the US dollar Canadian dollar. The gap did not get filled yet. The setup is still valid because there's the gap, and behind the gap there's that heavy volume zone. So chances are that there'll be a pullback and the price fills the gap, reacts to this heavy volume zone, and goes upwards. So this is the same setup as on the euro. There's a gap, heavy volume zone behind the gap, and there should be a reaction. In this case, this trade looks a little bit more risky to me. Let me zoom this in and show you. The reason being is that this is a very weak low, right? And the price likes to test those weak lows, right? If there was like a sharp rejection of lower prices, something like this, then it wouldn't be a weak low anymore. But this is a weak low, right? Also in here, there's a weak low, and very often there is a liquidity below those weak lows, and price likes to test that. So the risky thing here is that if there's a pullback, maybe the price won't react to that heavy volume zone here, but will want to test below that weak low and shoot for that liquidity, which would obviously mean a losing trade if we went long from here, right? So that's why I'm saying that this long is a bit risky, even though this setup, which I have showed you, performs very, very well recently. This is a bit risky, all right? So that's what I wanted to show you on the Canadian dollar. And let's now go for the NQ. And on the NQ, there are two short levels, and both those short levels are quite close to each other. So let me talk about them here. The first short level is this one at 21,865. It is based on heavy volumes formed in this rotation, which took place before this strong sell-off. So this is telling me that sellers were active here, then the sellers pushed the price aggressively downwards, and because of this sell-off, I know that sellers were active here, right, building their short positions. So we have strong sellers here, and when there's a pullback, those sellers should become active and push the price downwards. This is the highest peak of that heavy volume zone, and also fair value gap from Smart Money Concepts highlighted in red, right? And this is the beginning of the fair value gap. I like to trade from the beginning of the fair value gap. So all this is telling me to go short from here. Just now I'll need to wait, and if the price reaches this place, we can go short from there. Now, pretty close to that level is also another level, this one, at 21,930. And if you look at the volume profile, it is very easy to spot, because what absolutely stands out here is this strong volume zone. And this volume zone, this volume cluster, formed when the price rejected higher prices and went into this sell-off. So this volume cluster represents sellers who rejected the higher prices, started to sell aggressively and pushed the price downwards, right? Massive volumes right here before the start of the selling activity. So this is telling me about activity of strong sellers, and that's why I have the level here at the beginning of that volume cluster. And in ideal scenario, we'll see something like this. Pull back to the first resistance, reaction, and then pull back to the second resistance and reaction. Now let's go for the next trading idea, but before that, just a quick note about a sale which I'm running on my best educational and indicator packs. If you go to my website, which is traderdale.com, and if you click this button, trading course and tools, then it will take you to this page, and in here you can browse trading education and trading tools, which are currently massively discounted. It is the volume profile pack focusing on volume profile trading, the order flow pack, which will teach you everything about day trading with order flow, and the VWAP pack focusing on VWAP trading. All those are discounted until this Friday the 14th, and if you guys want to get all of them together, there's a very special deal where you get all the 3 packs together just for $5.97, and you can get it until the end of this week. Alright, until the 14th. So that's about that, and let's now go back to the chart and let's talk about the Euro Australian dollar. So this is the Euro Australian dollar, and this is a 30-minute chart. As you can see, the price has been going very slowly and shyly downwards, and when the price is doing something like this, I don't really trade, because what I want to see when I trade is aggressivity of buyers or aggressivity of sellers. I don't see anything like that in here, but where I do see aggressivity is right here, this strong rejection of higher prices. This is a sign of aggressive sellers, right? Because buyers were pushing the price downwards, but then sellers stepped in and started to sell aggressively, rejecting the higher prices and pushing the price downwards. Now, if you look into that rejection zone, I can use the flexible volume profile like this, for example, to show you how the volumes are distributed here. And what stands out is this significant volume cluster, which formed right before the price turned. And this is very similar as on the NQ. Let me show you the NQ, because this is the same setup, right? NQ, significant rejection with heavy volumes, and it's the same thing as in here. Alright, that's the same setup. It is telling us about aggressive sellers being active here, and this is the beginning of that heavy volume zone. So when the price makes a pullback, there's a chance that there'll be a reaction, because the sellers from this zone should defend this place and push the price downwards, right? This level looks important for them because they placed a lot of their short positions here. The level is at 1.6758, and what we need to do now is just wait for that pullback and take it from there. Now, before I wrap the video up, I'd like to announce a winner of a contest we had last time. The prize of the contest were my custom-made volume profile and VWAP indicators for TradingView platform, and right now on your screen you see the name of the person who won in the contest. So congratulations to the winner, and what I'll do next is I'll do another contest for the next week. The only thing that you need to do to participate in this contest is leave a comment below this video, which I'll publish on YouTube, and next week I'll randomly pick one person to win this set of custom-made indicators. So that's about that. Thanks for watching the video, and I'll be looking forward to seeing you next time, and until then, happy trading!